Hi, my name is Marc Chapman. I run the HI Principia fund. During 2017, European equity markets have been in a bullish trend. This has been driven by earnings surprises from the corporates and also a strengthening Eurozone economy. Together with low inflation and a low discount rate, this has created a scenario of bullishness for the overall equity market dynamic. Now, looking at November, the market became more difficult. Stock picking in particular had a difficult phase, and this essentially was driven by the fact that after a long period of expansion, volatility was low and confidence was high, which essentially meant a correction was quite likely. Now, in terms of the individual characteristics going on in the fund, we would say that resources proved quite difficult during November. In particular, FLS Schmidt in Denmark, which is a manufacturer of equipment for the cement and minerals area, suffered because they forecast that in 2018 demand would be slower than the market expected. So this led to a decline in the stock price and we cut our position. Other individual names which proved difficult were ProSieben in France and Meri Tecnimont in Italy. In both instances, we've removed a position from the fund after revising our expectations. Now, going forward, we see a lot of opportunity in individual stock picking in niche type areas. So I would highlight UDG Healthcare in Ireland is a good long-term position. They manufacture packaging equipment for pharmaceuticals and advise healthcare companies on their communication with patients. Patient communication is growing and becoming more important, and they're the world leader in developing this marketplace. So through both organic growth and external growth, we think they'll deliver mid-teens to 20% earnings growth over the next 3 years, and this should drive a continued re-rating of the stock. In terms of fund positioning, we've reduced our gross and net exposure and adopted a slightly more defensive stance. The large long names are more in defensive type areas, such as real estate, and on the short side, companies which have benefited from cyclical recovery and we now feel are quite expensive are populating the short side. Our return target remains the same through time and the volatility target remains the same. Thank you.